All right, welcome to the channel. Today we're going to talk about an amazing financial tool that is called the Accountable Plan. And this is actually an IRS approved document, right? You don't need to submit it or anything like that. It is just an IRS document that is allowed to, for your business. And this really, if you use it correctly, it really becomes a vital tool in managing your expenses and operating much more efficiently. That's going to allow you to maximize all possible deductions and remain in compliance. So let's dig right into topic number one. All right, first things first. So what exactly is an IRS accountable plan? And you're probably thinking, this sounds just way too complex, IRS approved accountable plan. And it really isn't. It's essentially a flow chart, if you will, that allows your business to reimburse employees tax-free for business-related expenses while conducting, company business. So again, this is really important because a lot of us get into this habit of, we send an employee out, hey, can you buy this, supply, this tool, or, go take this client out to lunch. And then they come back and they say, hey, it was $100. We give them a $100 check and we think that's good, right? We take a $100 deduction for whatever it was and the employee got their money back. Well, inadvertently, you're probably creating taxable income for your employees. So that's the value of this document in terms of, maintaining your employees happy and appropriately accounting for reimbursed expenses. So let's define some of this stuff, right? What are the benefits? Well, the benefits are that, anything that occurs in your business, whether your business is paying for it directly, or of course, in this case, the accountable plan, if we're having others, right? And by the way, others could just be you. So if you're saying, listen, I'm a one-person corporation or business entity, right? Does this work for me? Absolutely, right? Because there's a lot of things that we're doing from our home. We're buying supplies for the home that sometimes are used for the business. All of that has to be done correctly. So again, business purpose. Number two is a big one. We know that substantiation is important. We need documentation. We need a receipt. And also there has to be a tracking of the money, right? I gave somebody $100. I need a receipt for $100, or I need a receipt for 80 and I need the $20 back. Because when all of a sudden we're saying, oh, it's only $5, keep it. Again, we're running into that problem. So accountability of, what was the purpose, the substantiation behind it, and of course, the accountability of the money going both ways is going to be very important. Now, what are the advantages for employers and employees? Well, deductibility, right? And no income. So because you're doing it correctly through an accountable plan, your business gets to deduct those deductions, right? Offset income. Your employees are getting their money back and they're not picking that up as income, because we're going to talk a little bit about it later on in this video of what the potential impact is. So again, two very important things, right? How do you use it and what are the advantages? And now let's break it down a little bit further. All right, so let's get a little bit deeper into this. So knowing exactly, what is deductible under an accountable plan is going to be key to you leveraging this, IRS document to your benefit. That's going to be critical. So we have to understand that, just about anything and everything, if it has a business purpose, is going to be deductible for your business, right? The question is, is this deductible, right? No, the better question is, how do I make this deductible? So things from, travel, meals, all of these things that impact the day-to-day of your business are going to have a dramatic impact on your tax savings if you use this document correctly. And again, it's a plus also on the employee side, because you don't want them to end up with any surprises. So number one, travel expenses, right? Can we deduct airfare? Yes. Can we deduct mileage? Yes. Lodging? Yes. Incidental expenses related to business travel. All of these things are deductible. Even if your employee pays for it, you're reimbursing them under this accountable plan, right? Number two, meals. Are meals deductible when you're asking your employees, right, to travel, far from the home base, whether that's 100 miles out of state, whatever that is? Are those meals deductible? Yes, it is. Now remember, just because it's a reimbursement, right? So your employee's giving you a receipt for meals, $50. You write them a check for $50, right? You've got a deduction for $50, but it's still subject to the 50% limitations, right? Just because it's a reimbursement doesn't escape the meals deduction, which is 50% of the total, right? So keep that in mind. Entertainment as well, right? Sometimes we're going out, with our clients, and we're going to a venue, we're going to a ball game. And again, your employee is going to say, hey, I spent a couple $100s on these tickets. You're going to reimburse them. It's going to show up on your P&L, but again, entertainment is for tax purposes, not deductible. So all those rules you have to keep in mind, because sometimes we don't want to make decisions of, oh wow, I'm going to send so and so to some tickets over here to entertain this client, or go out and have a nice meal, because I'm reimbursing my employees, so it's 100% deductible, right? So no, the rules of the game for taxes still apply. Meals, 50%. Entertainment, not deductible, but 100% of the money goes back to your employees. What else? Things like tools, supplies, all of those things in the course of regular employment are going to be deductible by using this accountable plan when your employee pays for it. All right, documentation is going to be the backbone to this accountable plan. And of course, it's going to let you sleep at night because you know that things are being done correctly. So best practice here is to develop, an SOP, a standard operating procedure that walks both the company and your employee on what the steps are to properly get reimbursed for a deduction, right? So that we put money back into the employee, and of course the business legitimately gets to take that deduction. Otherwise, all we have here is just a mere wish list of getting things reimbursed and deducted as expenses. So let's dive deep into this on what the best practices are of substantiating your business expenses, again, to ensure that you're in compliance with the deductions that you're taking. So number one, documenting is so key to this form, right? We need to have receipts, we need to have logs, right? Itineraries, explaining the travel, right? It's not good enough to say I went to Home Depot. Good for you. I went to Home Depot because I bought this tool for this specific job, right? We have to document all of that, right? It's kind of like, a meals receipt. You got the date, it's got the, what you ate, and it's got the name of the restaurant. That's not good enough. We have to write two more things, right? Who were we with and what did we discuss? So documentation is going to be very, very key here. Number two, timely reporting. We can't be reimbursing people for a month or 2 or 3 down the road because, number one, documentation gets lost. If there's something missing on the, the reason for the travel or for the expense, that's lost. All of a sudden, people are making up a whole bunch of stuff that doesn't make any sense. And of course, there's this reimbursement of excess money provided, right? If you gave your employee $100, hey, go out there and buy something, and they came back with it was an $80 expense, you got to get that $20 back from them pretty quickly. Okay, so there's some guidelines here that we need to follow, and timely reporting with anything in business is going to be key. Number three, listen, use technology. There's a lot of great apps out there, whether it's things like MileIQ. You can use Excel to track all this stuff. You can create, a form on Word. It's a reimbursement form that your employees, submit to you every time they go on a trip with a client or they go out and buy some supplies. The key is to be standardized with this so that what one employee does, 10 employees do, 100 they do the same thing. It's going to be very, very key to winning with this form. All right, so not everything is equal and so straightforward with some expenses like the ones we've talked about, right? There are some exceptions to this where you have some, extraordinary ways of reimbursing, your employees and maybe even independent contractors, right? So the important thing is to also maintain compliance when these issues show up later down the path, right? And how do you avoid this? You avoid this by having a great SOP, right? Standard operating procedure on how this, IRS accountable tool that the company has implemented, how we're going to utilize it, and be clear with the employee on what they can expect from those reimbursements. So number one, what is not deductible? It is so clear in this document that you share with your employees what is not deductible, right? What is deductible is you purchase something, you're getting reimbursed. You took a client out for meals, you're getting reimbursed, right? You traveled, you're getting reimbursed. You might want to talk about things like, hey, if you bought a bottle of your favorite liquor for lunch, that's not going to be deductible. It's not an ordinary and necessary business expense. So important to have those things dialed in so that nobody gets surprised. Your employees are having a good time, and all of a sudden, bottles are popping, and it's not something that you expected, and it's hitting your bottom line cash flow, right? So be cognizant of that and setting the rules very, very clear. Number two, listen, we have per diem and we have mileage rates, right? We can pay people by a fixed fee, if you will. You're going to get X amount of money for this travel. You're going to get X amount of, cents per mile when you travel, or you can do the actual cost, right? Which is whatever you spend being reasonable and necessary, you submit a receipt, you get reimbursed. That's the actual cost method. So just having absolute clarity in this document is the point of this, and being compliant so there's no some of this today and some of that tomorrow. And number three, also we should be clear when we're reimbursing an employee versus a contractor. When we reimburse an employee, it's got to go through payroll. So you might say, well, wait a minute, payroll, they're going to get taxed. No, it's a reimbursement not subject to withholding and not subject to payroll taxes such as Social Security or Medicare. But that's the way it needs to be accounted for. This is an employee. If you start writing checks to employees for $50, $113.69, whatever that is, if ever questioned, the question is going to be, what is this? And it could be that it's hidden, right, compensation. And that's where the IRS can come in and say, listen, we're going to hit your employee with compensation, and we're going to hit both of you for the Social Security and Medicare tax. So again, being super clear on how to do this correctly is important. So all reimbursed expenses must go through payroll. Again, it is a non-taxable event for your employee, and it's a 100% deduction for your company. When you're using the services of a contractor, an independent contractor, sometimes there's two components, right? My fee is X to do this service, and I also want to get reimbursed for my out-of-pocket expenses. So there has to be clarity in the same process, right? If that independent contractor is giving you the expenses, you're going to reimburse them. Deductible, they're going to account for that however they are in their own company tax return, right? But the important thing is that the contracts that you're writing between your company and these independent contractors allows for a reimbursement of expenses. So they're not having to get that tacked onto their 1099, right? Because if we're paying somebody $600 or more in the course of a year, we're going to issue them a 1099. And probably what they don't want is you've given them a 1099 for, $3,000 and change or whatever it is, but half of that is actual reimbursable expenses that have been delineated in the contract. So really, really important to make sure that you're just, listen, you write down what your wishes are, how you want this accountable plan to work, keep it in compliance, follow the rules, have everybody follow the same rules, and that's how you're going to win with the accountable plan. All right, well, there you have it. Mastering the IRS accountable plan. It's much more than just following a whole bunch of rules. It's really understanding this is a great tool to allow you to do some strategic planning on how to move money around, whether that's from the business to an employee, the business to yourself as an employee, or, your independent contractors that you're working with. It is crucial to understand how to properly utilize this to be in compliance with it, right? It's going to allow you to just run a healthier, more financially optimized business. So again, if you've gleaned anything from this today, if you like this video, hit the like button, subscribe to the channel. If you've got some friends that are entrepreneurs, share this video with them. And again, together we can optimize all the available tools to take as much advantage as possible of all the expenses that we have so that we can optimize our profits in business.